Good day, guys. How you doing? This is Raymond again, and I'm actually sorry for the alteration that came in our classes between on Monday to now because I've been unable to host any class due to my health and my busy schedule. So I'm really sorry for that. So a brief preview concerning our assignment. I believe a lot of people really had issues with the assignment, and by now I think you should now be consistent with the with the market and how it goes, how things happen, and a lot of things like that. So here is a brief example of the assignment. I'll be taking them. I may not be checking all, but I'll just be showing few mistakes that people made in the assignment. So here is the first one on my list. This is very correct. This is a downtrend, which is very correct. And this person draw from the peak to the second peak to the third peak, and the person draw. The person is supposed to draw it out actually. Well, it's okay, it's still fine by me. So let's move to the second one. Let's move to the second one, which is this one. This one, to me, this one is not correct because this person does not even join it from the bottom. The person just pick a place and join to a place. No, this is actually wrong. And if it must touch the candle, at least is that it touch the wick or it touch the body. So your trend line must touch the wick or it should touch the body. If you don't have that, believe what you draw is just wrong. So that's that. This is actually wrong. So it should draw from this point straight up to this point and draw into the future. That's what I taught you. And this is very good. This is very correct. But this person does not see this well. This is not the highest peak in this market. This is the highest peak. The trend line should be drawn from here across border like this to this side. So eventually, if you draw it from here, you will see that you'll be able to link that candlestick to this point. Do you understand what I'm trying to say? So that is that, and let's keep moving. So these two, it's kind of okay, but it's wrong because it draw your trend line to the future, draw it straight into the future. You guys are shortening the trend line. That's not how it's supposed to be. Same thing here. You don't just join 2 points together. This is just the joining of 2 points together. This is wrong. So you join 2 points together and draw it straight into the future. I think this is the common mistake everyone is making. So see this person here. This person here is drawing the trend into the market. You don't draw the trend into the market. The trend serves as a guard for the market. So, like for example, for a downtrend, this is a downtrend. The market touched the place, it's bounced down. The market should not break out of the trend line. The market should just touch the trend line, bounce down, touch the trend line, bounce down. That's how it should go, not the other way around. So let's keep moving. So these two join 2 points. No, this does not validate to be wow. This is a little bit okay, unless this trend line is not touching the wick or the body. The trend line is just at the top, and that is not. I'm going to draw 3 trend lines before I actually start today's class. But please make corrections of that in your. This is perfect, almost perfect because okay, don't worry. Okay, okay. Let's see. Let's see. It's okay. It's okay. This is a single person. Let's move. Wow. See, what this person drew here is just the direction. You're just showing us the direction of market. This is not the actual trend line. I told you that you draw from trough to trough if you are drawing for uptrend, and you draw from peak to peak if you are drawing for downtrend. So here you are just cutting across the market. You're just trying to show us that this is a uptrend, whereas you should draw from this bottom, from this point here, connect it to other points. So let's move. Aha. So see what happened here now. You did this wrong. The next one you did it very correct, even though you didn't draw it into the future. Whereas you're supposed to draw it into the future, you didn't draw it into the future. But this is actually the second one you did is very, very correct. This is how it should be, not you drawing into the market. So let's see. Okay, this person is having. Okay, the only issue I'm having with this person is that there are a lot of trends to be drawn here. You can connect these points from the points from here to here, from this one to this one, draw it into the future. There are a lot of things to be connected here. And this person just joined 2 points together. I said you don't just join 2 points together. You join points together and you link them into the future. That's what trend is all about. So that we anticipate in future if market will come back to that trend line, if it will react or it will not. So that's the reason why we are actually drawing trend lines. So see, this was just joining 2 points together. Really? No, it's 2 points again. Please, if you are this person, DM me privately. Maybe I will take you personally concerning trend lines. But you have to see, you don't just join 2 points together. You join 2 points together and you connect them into the future. So see, let's see. Okay. Wow. I think you guys are not getting this thing. This person is trying. This is actually good. This is great. Yes, wow, this is nice. Oh no. I think I really need to do a recap concerning trend line before I actually show you guys what I have for you today. Today we'll be looking at candlestick pattern. But before I go into the pattern, I think I have to show you guys something. I think I have to show you guys something. Sorry. My screen is just popping up. I'm sorry, I have to record this in the kitchen. The noise is loud out there. So I'm actually very sorry for that. Just bear with me. I believe the noise is not disturbing us right now. So let me just go to my trading view and let's see what we're having. Okay, so I'm back to my trading view. So today I'll just be showing you the example of trends I've drawn and how I do them, and maybe some basic examples on what I did last week. So this is my chart, but now I'm going to hide some stuff because of better understanding. So beautiful. So this is a plain chart of mine. Oh Jesus, this is not plain chart. Oh, what can I do for you guys? Okay, let me go into 15 minutes and see what we can have there. One of the basic law I told you guys concerning trend line is this: whenever you are drawing a trend line, zoom in. Okay, maybe zoom out. Zoom out. Just do some. Just do one. Maybe zoom out or zoom in. Zoom in. Okay, zoom in. Zoom out. Okay, you zoom out. Okay, sorry, you zoom in. You zoom in the market to have a better look of what's actually happening in the market. So, for example, now you can see before I do anything, don't mind these purple lines. They are my. Don't worry, we'll be learning that this next week we'll be doing so. So you can see trend line is about connecting 2 points together in the market. Then you draw them into the future. Connect 2 points together in the market. Then you join them into the future. You can see what I did here now. So see, this is 1 point. This is the second point. I drew a trend line. You see, the market is not even yet there, but my trend line is already there, waiting for the market to come here. So the objective is that whenever, see, the market is stopped at this point. Sorry. The objective is that, see, the market is stopped at this point. The market is stopped at this point. So what I'm now anticipating is that it is possible whatever that stopped the market from going above that line, that's before now, can later come and affect this market at maybe nearest future, or so I'm anticipating that whenever price approach this trend line, something should happen to the market. I should expect something like a drop on the market. So trend line serve as a guide for you in the future to know the price reaction at a particular area. You understand what I'm trying to say? You can see this point. You can see these ones are small. Let me zoom them in so that you see them. Any 2 points in the market, draw them. I had a lot of trend lines on my chart. I had to delete them as they get invalid, as the history passed, I have to delete them. Maybe I have a break somewhere. So I'm going to make examples now. So when I make examples now, let me finish my zooming in. So see this market here, automatically this is an uptrend. Remember the law, draw 2 points, draw them into the future. That is it. Sorry now. I think there's something somewhere. There's something somewhere I'm not getting. Okay, beautiful. So this is what I need. Then I think let's go back to our chart. So as you can see this, you all agree with me that this is an uptrend. In this uptrend, there are many trends actually. This is an uptrend. But let me just see what my eyes can pick first. This is what my eyes can pick first. This one, this guy, and this guy, draw them into the future. This is it. This is it into the future. This is the trend line. This is the first touch here. This first touch here, the market broke this level, created another higher low. Please remember, these plans are the reason why I really spend more time shouting on basics is because of what we're about to do. Forex is so simple that even a toddler can make millions out of Forex if the toddler is having a better understanding. All you need is understanding. Understand what the market is doing. Understand what the market is telling you. Understand the price action of the market. Here now, automatically I've seen a break in price here. So now I'm expecting the market to do what? To create another higher low for me. Once the market creates another higher low for me, I expect the market to create another higher high. So what am I expecting again? A higher low. At the point of my third higher low, I go for long. That's what's happening here. See the reaction here. Let me zoom in. So remember what I told you. It's still the same schematics. You guys just have to understand the basics. Once you understand the basics, it is as simple as that. And this is in fact, let me just tell you this. This is still the most, should I say, most understandable aspect of Forex. I'm still going to get to some area that if you don't understand this thing, get into those areas, just forget it. You can't get it. I'm sorry to use that word. You can't get it. Because these are the basic understanding that you should have first. So let's see now. This is the schematics of a uptrend, a basic uptrend that everybody know. Now I'm using my own even private chat to explain to you now. I just try I don't make mistakes of deleting a lot of stuff now. Okay. So now this is the basics. So the point here is that the market comes to touch this point. The market broke this high, the high which is here. The market broke this high. Or let me just use this. The market broke this high here. Let me use something shining, something visible for everyone to see. Okay. The market broke that high, created another high for us. The market comes again to create a what? Another higher low for us. Then the market went back again to create a what? A higher high. What are we expecting? Another higher low. It's as simple as that. That is what happened here. The market came down, created a low for us, which is here. Abi. The market created a higher high for us, which is there. The market came back and created what? A higher low for us, which is here. The market came back and created what? A higher high for us, which is here. When you see this, draw your trend line, connect the 2 points together, and wait for the market to come back. Forex is as simple as that. If the market come back there, based on some price reaction and price action, we are expecting the market to do what? To pull up. It's as simple as that. Once you get these basics, that's all. Go and start trading. Sorry, did I say that now? I don't really mean that. Once you get this basics, sincerely speaking, you can start trading in any market, even crypto markets, Bitcoin. You can start trading Bitcoin with this. All you just need is basic understanding. So now let's connect these 2 points again together. So I haven't seen this. This and that 2 points again. But this one is invalid, so we don't draw it. So this one too, second touch here is invalid. So we don't draw it. As simple, that's how we track market. This is what they call tracking of market. You track the market. So I believe with what I've explained now, I believe I really I've explained everything you need to know. If you don't still get this thing, please. That is why I have those videos till next week, Sunday. By next week, Sunday, I'll be deleting those links from our group so that you guys can have time for yourself and have time to learn from other people. Likewise. So let's go into today's activities. That's everything about trend. Same thing for downtrend. Sorry, I have to delete them. So they won't be confusing, It won't be confusing when next I check my chart. I'll be like, Raymond, why did you mark this position? Are you expecting something there? And create a catastrophe for the rest of the week. So let's just leave that now. Okay. Okay. These are the part of the things I'm talking about. Imagine now, I don't even know why I did this. Okay, this was another block. So let's leave that for that. So okay. So that's sit down trend now. I connected these 2 points together, not knowing that the market is even coming back to this point to touch it. Imagine it's as cheap, for example, as cheap as that. Connect these 2 points together, draw it into the future. Once you draw it into the future, expect market to come back into those areas again. Once market come back into those areas again, look for your confirmation signals. Once you see your confirmation signals, look for price action. Once you see price action and reactions on those trend lines, then you know what to do. Maybe you'll be going long, maybe you think the market will be breaking or the market will be going back down. So it's as simple as that. See, after joining these 2 points together, see what happened here. The market bounced down. The market came back to touch that line again. And see what happened again. The market bounced down. The market wants to come back to touch it again. The market bounced down. It makes this thing very, very valid. See what happened here. This first touch, second touch here. See what I did. First touch, second touch here. I'm not even sure that the market is going to come back to that line again. What did I do? I draw them out. I draw them into the future. See what I'm expecting now. I'm expecting the market to come to this point, and I will wait patiently like a patient dog. Wait for price reaction, wait for confirmation signals, short and load. This trade last week, I caught this trade on, no, not last week. Is it Friday or Thursday? I think Friday or Thursday. I caught this trade based on trend line, what I taught you. Let's go to 15 minutes so that we have a better look of what happened in the market and how I eventually made some money from the market. The same thing. In fact, I was at my farm when I saw this, even on my phone, not even on my system right now. I know what the market is going to do next. So see what happened here. First touch here, the market came up, created an high. Then second touch here, what did I do? I draw the market, I draw it out. After drawing it out, see, the market came back into this place, and the market gave me correct 50 pips, like correct 50 pips. If you load 50 pips with a single lot size, which is a one standard lot size, that is $500, 250,000 naira, soft, no wahala, nothing. Just be patient and see what the market will do, and understand the basics. See now, I'm having 2 trend lines here already. Can you see what I'm saying now? This is a trend line here at this point out. I have this point with this point again. See what's happening. Once the market is trying to come to this side, see the price action that is happening. So that's what I'll be talking about today, and I'll later, come back to this thing, this place, and explain what has been happening in this market for you. So just wait. So our topic today is candle patterns. So last week I explained that candlestick reveals the interaction, the communication, the rising or falling power between the sellers and buyers. And last week I told you that the bullish candlestick we use green, and the bearish candlestick we use red. Normally, it's not compulsory. We have some people that their charts are green. We have some people that, for example, my own chart is always red and blue. I love it that way. Except my trading is just green and black, and I love my chart red and blue. The blue means the bullish one, the buyers, while the red means the sellers. So the simple logic between them is just that a candle in which its close is above its open, it's a bullish candlestick. Why the bearish candlestick always have its close below its open? That's all. That's just a simple thing. So which means a price open at a specific time frame, and at that time frame, it probably 15 minutes or 30 minutes, then the price closed below the open price. It's as simple as that. So once we know that already, so let's move to today. So today we want to combine candlesticks together. Want to combine candlesticks together. You're good to go. You can use it. So we want to combine candlesticks together. We want to, let me just say, once we see reactions of some candlestick, we want to actually identify what is actually going on in the market. I'm sorry, please. Please don't use this one. Why don't you use this? Oh, really not. Stop. So sorry for that. So as I was saying, so candles reaction and stuff like that. So let's go to the screen and let's see. For those of you that have been reading those books, that book I have been sending to you, that book I sent to you, sorry, you will see something like this. So don't forget that I said, don't mind the color that I use in this book. It actually means the same thing. So let's start here first. So the first thing we'll be looking at here is engulfing bar. From the word engulfing, what is the meaning of engulf? Engulf means like you engulf something, you close something, like something is embedded in you and you close it up. That's all. That's the meaning of engulfing bar. It says that it's tied to, when a fully, engulfing bar, as it states in its title, is formed when it's fully engulfed by the previous candle. So what this thing means is that, let me just go to the image so that you guys can have so this is it. So we have two types of engulfing bars. We have the bearish engulfing bar and we have the bullish engulfing bar. The bearish engulfing bar means maybe previously there is a smaller candle that was created by the market, which means there's a conjunction, a consolidation in the market in which the buyer and the sellers are arguing. Let me just use the word arguing. They don't know who is going to take the lead. So, and at the close of that candle, at the open of another candle, we just see a bigger bearish candle, which engulfs, which swallow, which close up the previous small candle. That is called a bearish engulfing candle, which means we have a smaller candle here and a very big red candle. Let me use that name word, red candle there, closing up the previous candle. That is called a bearish engulfing candle. So the next one is, so okay, you see this now. This is usually formed at the I'll give it the, should I say, the market identification of this. I will show this to you in my own chart because you might not understand what these guys are explaining to you. But let me just try and use it. Maybe some of you can get it. So if I go back to my chart and see what we can do with our chart. So if there's an uptrend, maybe the market is going up. For example, in this case, if this market is going up, and suddenly the buyers start losing their momentum in the market, which means sellers are coming in or they are trying to reach a level of resistance or a level of a trend line, automatically what happens is the buyers lose their power and the sellers come into the market. And once the sellers come into the market, what happens to the market is this: the market starts consolidating, in which signifies that there are ranges in the market. So after the closure of that candlestick, the next candlestick that is going to pop out is a big bearish candle, which means like buyers has overthrown, sellers have overthrown the buyers in the market. So changing that trend from an uptrend to a downtrend. I'm going to show you examples in our chart. Let's just keep going. We still have a lot of things to see today. So the second one is bullish engulfing candle. It's just the opposite of what I've said earlier. It is just candlesticks, smaller candlestick, maybe in a downtrend this time around. The candlestick is come from a downtrend, then it reach a point of support, and after getting that support, then the sellers start losing their momentum, start losing their power, and the buyers start coming in the market. And the first thing we see is a consolidation. And after seeing a consolidation, we now see a very bearish
a very bullish candle, which is green or whatever color you paint your chart to be. So after seeing that, automatically it signifies that buyers are now into this market while the sellers lose their momentum. That's the simple logic. So that is bullish engulfing bar. So let me just take you to my chart and identify these as fast as I can so that we can proceed with our class. So good. Let's go on a higher time frame. They are usually more visible on a higher time frame. So let's see now. Let's see now. Okay, beautiful. So see these now. See these. See this candlestick here. Sorry, I don't really want to use my chart. I don't really want to mess things up. Let me try and get on the chart for you guys. So you can use that actually. So let's see. Yeah. Okay, I think I have euro now. Beautiful. I love this. I love this. So sorry. Let's see now. Sorry for that. Let's see. Okay. See what happened here at this point. Let me zoom in very well. See what happened at this point between these two candles here. See these candles here. The candles here now. The candles here. This red candle and this green candle. You know, actually is a what? Normally, this is a what? This a where's my sorry? This is it now. This is a what? This is a downtrend. But when the market wants to change into a buy, see what happens. The first thing we see is a what? Is a reaction. A reaction. See what happened here now. You see this small bearish candle and this bullish candle. Automatically, what happened there? The sentiment of the market changed. The buyers came into the market because the buyers have overthrown the what? The sellers. See what happened here? See what happened here? This is a sell. And when we want to change to a buy, which is this buy here, see what happened? See this candlestick here? That two candlesticks. Can you see them? That two candlestick at the middle of this thing. You can see the small one. So this is a bullish engulfing candle. So now let's look for bearish engulfing candle. So you should know now by this time now we should see them at the top, right? So we should see them at the top. So I will be linking this to see what happened here. Okay. One thing about this is that you won't always see them. Like you won't always see them. That's why we're having many. Not just I'll be teaching you maybe let me just say like 6 today. But if you want to, want to learn more, come for the class. So come for the class. So we roll together and so there's still more to know. So let's see this one. See this candle here. This is a what? A bearish engulfing candle. So that's a bearish engulfing candle. See the same thing here. You can easily identify them. After seeing this video, just go on your chart and start looking for them. This is it here. This is it here. So that is just that concerning that. So let's go back to the class and let's see, because we still have a lot of things to check on. So let's go. So that is about engulfing candles. If you want to know more, go and read the book. The book explains a lot. But if you want to know more, come to Raymond's mentorship class. Then we roll. So then after that, we have the doji candlestick. What is a doji candlestick? A doji candlestick is a candlestick that it's open and it's closed are on the same line. Wherever the price might get to, maybe you have long shadows down, maybe long shadows, both bullish or bearish, something like, okay, sorry, I'll be using my flag as an example now. Maybe you have something like a cross. It's usually like a cross like this. So this is the open price. The market goes up, the market comes down and close at that particular price. It's as simple as that. So let's go to the image that you guys can see very well. You can see it now. So this is the highest price, this is the lowest price, but the open and the close price is at the same place. So let me basically explain what happened here. Maybe before the market is at an uptrend. The market is going up, and it suddenly reached a stage of consolidation. I do call that place consolidation because it simply means buyers are equals to sellers. So nobody is owing power. So automatically what happens is the buyers will be struggling to buy, the sellers will be struggling to sell. Automatically, so if the price open at this point, the buyers come in to buy the market up, the sellers come in to slow the market down. The buyers come in up, down, till the period of that candlestick is over. So automatically what happens? The market closed at its open price. You understand what I'm trying to say now? So let's check it in our chart. So I'll be showing you, and we'll keep doing it like that. So let me get them very well. So okay, let me see. Okay, you can also call them indecision candle. Indecision candle. See, this is an example. This is a very beautiful example. This guy here, this guy here, this guy here, this guy here is a very beautiful example. See what happened there. The buyers, the bulls are in the market. They are pushing the market up, and all of a sudden, what happened is that then the sellers come into the market. Then they start putting the market, start doing some consolidation. Then the market, change its sentiment and start moving down. Forget about the bullish bull run that we later had, but that was what happened there. So let's look on that one again. If we can find, we will surely find actually. It's not that one. See what happened here. See, same thing here. This is it here. See, at this point here, see what happened. The sellers are in the market, and automatically there's a little bit of struggle, and a doge stick candlestick pops up. Then see what happened. The market did what? The market started moving up, even though forget about the down stuff that happened. So that's just that. So basically, just have them at the back of your mind that once you see a doji candlestick, prepare yourself that something is about to happen in the market. Maybe probably a short buy or a short sell. Wherever you find the candlestick, maybe you find it in a short form, or you understand now. So that is how we do it. So let's go back to our class. So I believe you guys are getting it. If you're not getting it, I won't say you should forget about it. Ask me questions. Okay? So let's go. So you can see now, you find them at the top of an uptrend or at the bottom of a downtrend. When the market is about to change its sentiment, when the market is about to change its sentiment to a downtrend or an uptrend. So that's when we'll find them. So let's keep moving. Let's keep rushing. Okay, the dragon doge fly. This is when I didn't explain something very well the other time. A actual doge candlestick always close at the middle of the candlestick. Like it's always close at the middle. Why a dragonfly doge candlestick always skew to the top. It's skew to the top, which means it shifts moment. Let me just say, okay, sorry. Let me use this as an example. Believe this is a candlestick, and this is the open price now. A normal doji candlestick will be, let me just say, normal doji candlestick will be the price, the open and the close of the price will be here at the middle of the candlestick. But a skewed doji candlestick, which is skewed to the top, it's called the dragonfly candlestick, will be skewed to the top like this. So we have a longer tail and a shorter head. You understand why the price remain there? So let's see what I mean by that. So this is what I mean. Can you see now? It's having a long tail. Why the price it's up there? So that's just it. So let's see. Which means at a point in time, sellers came into this market according to what I explained to you when we were studying the anatomy of candlestick. Sellers came into the market. They pushed the market a little bit low from the open price. They pushed it low. But what happened is that the buyers came into the market and started pushing the market up and closed the price, the price at the open point, which is at the top. So that was what happened in the market. So let's move. Okay, can you see what happened? You see, oh, beautiful. I think this is a very good example. See, this is a downtrend. So see what happened here. Sellers came in and they pushed the market up, and see what? It changed its sentiment to an uptrend. So let's keep moving. We have the gravestone doji. The gravestone doji is the opposite of the other one around. So this gravestone doji is just trying to tell you that maybe it's an uptrend before. But now, a very good bullish uptrend is been uptrend candle, which is a bullish candle is being from, but sellers came in and just pushed the market down. So it will now look like, I don't know what to call it now. It will look like something like the inverted position of what we have at Dragonfly. So you see, just like that. So that's what we have. So you can see, in fact, this, let's use this as our chart. Don't let me go back to that to save time, because I still have a lot of things to explain to you this night. Because at least by the beginning of next week, some of you should now try to execute trade on your demo account. You understand? So just using the simple thing and see how it goes. Though I'll be explaining a lot of things that serve as confluence with them, in which we help you in carrying out your trade with. Okay, what is Morning Star? I'm not talking about the devil right now. I'm talking about Morning Star. Like, it's the name given to a candlestick pattern. So what does this mean? This simply means we're having a very big bearish candle now. A very big bearish candle. Listen, a very big bearish candle. We have a small, maybe bearish or bullish. We don't care. Just a small candlestick, and we just see a long. Oh, sorry, bearish. Okay, yeah. We have a very big bearish candle, and we have a small, maybe bearish or bullish. We don't care. Just a small candle. It's a 10-3 candles actually. The first one is the big bearish candle. The second one is the small, either bullish or bearish. And the next one we have is a bullish candlestick, which give us something like a W pattern. Bearish candle first, a small bullish or bearish candle, then we have a bullish big candle in the market. So let's see how it looks like. This is how it looks like. The first bearish candle, the smaller, or it might be bullish or bearish. I don't care. So just see, maybe small, just showing a consolidation, just showing us like a significance of the market, that the market is not determined yet. The sentiment of the market is not determined yet. Maybe it's going to continue the trend, or it's going to just break up. So that's just the simple meaning of that. So that's that. So we have evening star. That's the morning star. Next one we'll be having is evening star. Evening star is the opposite of that. So we can find that too at the end of a bullish trend. According to what I've been explaining now, you can see that. Sorry. You can see that. I said we're having a very strong bearish candle, which is supposed to show you a signal that the market should be coming from a downtrend before. So now the market wants to change its sentiment according to what I explained to you. The first bullish candle, the first bearish candle, the second smaller one, it can either be a doji, it can either be anything. So see the combination of the first bearish candle, the smaller one, which serves as consolidation, and the longer one, which serves as the pickup of the market. The market starts gaining momentum, which means in this candlestick, I can have my doji here. Get it? And I can have a bullish engulfing candle here. So in Morningstar, it contains three things. It contains number one, it contains maybe doji or AMA or whatever. I'll start explaining AMA later soon. So then the next one is, what's it called now? The engulfing candle, which is when you remove the bearish one first. So the next one we're having is the evening star. So let's go, guys. So this is the opposite of the other one. The first one, we have a bullish candlestick, which shows that the big guys, the bull guys, they're in momentum, they're in control of the market. And the next one we have is the smaller one, which shows the consolidation. Then the third one we have is a bearish candlestick, which signifies to us that the bears are now in the market, in which the market is changing its momentum from the buy to the what? To the sell. So that's what it's about. Let's keep moving. You read this yourself. I'm just trying to give us an explanation. You can see from an uptrend there to a downtrend. So that's that. Let's keep moving. So we have the PIM, the AMA, the PIM bar. Let's look at the image. So you can see now. Notice something. Let me briefly explain this. This is actually different from doji. Remember doji? Doji is just trying to tell you that that open price and that close price are at the same point. So which means the candle open at the point and close at the same point. But here the candle does not open at the point or close. So let me just explain this as fast as I can. So a hammer pin bar is just trying to tell you that there is a long tail which shows that sellers are in control of this market before. Now the market reached its open price and now close above the open price, which is giving us a little bit of, a little bit of body at the top, indicating that now buyers are in this market. That's just the difference. Please, if you don't get it, please replay what I said earlier. We still have a lot of things to do today. So you can see now. So that's that. So the opposite is, I think, the shooting star, which is the bearish. Something going down. Just the same explanation. It shows a long tail pointing upward, and then it's, the price now move below the open price and close below that open price, and that's all. And giving us a little bit of a body there. So that's that. You don't need to cram those names, sincerely speaking. You don't need to cram those names. All you just need to do is understand, whenever you say a candlestick, understand what happens there. You'll be finding a lot of these things in the market. You even find them not even at the end of a trend. You find them inside the market, like inside a normal ranging market, trading like long-in market. So I'll go to my chart now. And I can explain them to you. So Amani pattern. This is when, okay, let me explain this. Amani, Arami, sorry. I call it Amani, sorry. That was when I was trying to try it. Arami pattern is just a type of pattern that we have this big bullish candle, and we now have small bearish candle. You can't believe I'm saying this. I've never gone through this book. Like, I've read it before, actually. That was like 4 years ago, but I can still remember them vividly. So yeah, I'm correct. So okay. Bearish candle, we have small bullish candle. Sorry, it has been long. So we have a big bearish candle and we have a small bullish candle. So we'll be identifying these guys in the market as soon. So Amani is still Amani pattern. So I'm still even correct. It's just that we have two sides, just as we have engulfing. Engulfing, either we have the bearish engulfing candle or we have the bullish engulfing candle. So Araman pattern is that we have the bullish one, we have the bearish one. So we have a bigger body and a smaller body. So let me now ship in something. You notice when we're talking about evening star and morning star, we said we have a bigger body, a smaller body. So now, if we now have a bigger bearish candle here, which is bigger than this, automatically we have an evening star. If we have a bullish candle here, bigger than this guy, automatically we have a what? A morning star. If you don't get that, please replay this video. This is why I'm recording them. So you guys can replay them, and I won't say two things twice. You guys can listen to them twice. So see what happened. See what happened here. See, this is Amani. See what happened here. This making this guy automatically a what? An evening star. So let's move. Tweezer top and bottom. What's tweezer top and bottom trying to tell you? The candles are having equal size. We have a big bearish candle, and after it, we also have a bullish big candle. Or we have a bullish big candle. Beside it, we have a bearish big candle of same size, of same length, most of the time of same length. But you might not even be what you can see now. So something like that. So you can see. This is what I'm talking about. So of same size, same thing. We call it the tweezer bottom. So tweezer top, tweezer bottom is when we have the bearish first and we have the bullish bottom. So bearish first, the market is coming from a downtrend, bearish first, then a bullish, so an uptrend. So now a tweezer top is the bullish first, now the bearish. That is that concerning that. So you can read it in the book. It's well explanatory. In fact, it's more well explanatory the way I do there. So you can see them there. So let's see. Are we done with this? Okay, so this is an assignment in this book. when I was reading this book, I did mine. Like I went on charts, I started looking for candlestick patterns and a lot of things like that. So, now we are here. So these things I've been telling you, sincerely speaking, for Forex Aka, as a lot of people call me, as Raymond the Beast Trader will tell you, this simple thing I've been explaining to you guys, they are just the basics I use in trading. I understand candlestick patterns. I understand the reactions of candlesticks. Getting that is simple for me. I understand trend line. So what is this? So let me briefly do something for us. I think we are done with this. I think we are done with this. Yes, we should be done with that. So next thing should take us to another topic entirely in the candle. So let's see here. That's an assignment. You can check that in the book. And market structure. So this was what I taught you guys first. So this was what I taught you guys first. Yeah. So you can see what it is saying. Ayalu, something like that. Please read that book. Read that book. A lot of you are too lazy to read books. I don't know. You want to make money without reading books. You know, before I used to say this thing is a scam. Readers are leaders. It is true. Depending on what you're reading, actually. If you are reading Nigerian systems of education, you are reading their book, system of education, you have a good grade, but it won't make you money. I'm telling you, no. I'm telling you this, unless you find a way around this country, you understand? But if you focus, maybe you are in a business or you're into forex trading or crypto trading, get good books, read them. Those ones will pay you. Like you will see immediately effect result. I was sharing with a brother that was with Samuel. I was telling him, by the time I was making the last class I did before, I had some, some illness, and I told him I just bought 2 big books. Like each of them is having 142 pages. Funny thing is that I've almost finished them now. I read every day. So once I read every day, whatever I'm reading, I implement them in my trade every day. With that, it will make you a better person. It will make you a better trader. Sorry for that. It will make you a better person. It will make you a better trader. It will be giving you an edge in the market. So that's just that concerning that. So let's see the chart and let's see what I'm talking about and how we use them with trend line. So just forget it. If you don't understand trend line, what I'm about to explain, just you won't get it. You can't get it. So take your time, see those videos, and it's left to you. You just have a month. After a month, I'm going to delete them all from the group, and maybe probably you can you can pay for mentorship. Take them again. Trust me. What am I doing? Take them again. So let's move. So sorry. I don't know what's going on. My chart is not loading. I don't know. Maybe it's the signal or let me try this in a minute. What's going on? My charts are not loading. I don't know what's going on in the chart. Okay, let's use this then. So beautiful. So pertaining to what I taught you. So if you don't attend class or watch videos, just forget it. What did I just do? What did I just do? Jesus. Oh, okay. I'll get them back. So, okay. Let's check. I'm looking for a trend that will be more explanatory, because I'm seeing a lot of trend myself. I'm seeing a lot of trend, but I want a trend that will be more explanatory so that you guys can just see what I'm saying as soon as possible. So let's get to see some trends. Okay, I'm seeing some very good trends. So as most of you will agree with me, this is a what? This is a clear downtrend, right? So we should have, this is the direction of the market, the summary of everything we've been doing. This is the direction of the market. Once you want to draw your trend, you draw from the, you draw from the peak. Now this is a downtrend, you draw from the peak to peak. Higher high to lower high to lower high to lower high.
That's just the summary. So this is it here. Connecting this guy here. Let me just connect this one here. Let me connect this one here. This one is okay. But we actually had the breakout because you remember what I taught you? I said connect 2 points and move into the future. So let's go. Let's just say that's the future. So if I had connected these 2 points here, these 2 points here, these 2 points here, these 2 points here, sorry, these 2 points here, these 2 points, 1, 2, 3, these 2 points here, you guys can see that, these 2 points here. If I connect these 2 points here, so the market, once the market is coming back, they see what happened, the market dropped. But let's look at what actually happened when the market wants to change its sentiment to a bearish one. See what I told you. See the confirmations that we saw. This is actually a what? This is an evening star. Can you see that? A bearish big candle, a small one, a bullish big candle, a small bearish candle. Then see, can you see that? Can you see that formation? See what happened here again. See, this is a bearish engulfing candle. It engulfed this. These are part of the things we look in taking our trend. Let's see what happened when the market hits that trend line again. Let's see the kind of reaction. You see what happened. This is a what? This is a bullish engulfing candle. A bearish engulfing candle, sorry. As you can see, they see what happened. The market dropped. Each time you keep seeing this in the market, you keep seeing it. You will keep seeing these things in the market. So what the assignment I'll be having for you guys now is this. By Monday, by the special grace of God, I should be having a live Zoom session with you guys. And that live Zoom session, I'll majorly be dealing with support and resistance in a trend line. So I congratulate you if you can make it to this far and you understand. Yeah. So all those things I said, that's the reason I'm giving you that book. Go and read them in that book. Go and read them in that book. So the next class I'll be having with you is support and resistance in the what? In a trend line. Let me just give you an easy appetizer. What's it called now? So see what happened to the market here. According to what I taught you in support and resistance, whenever we have the market coming to touch a point, it bounced up. That place turned to what? Support, right? The market broke it. That point turned to resistance. Once the market is coming back there, it's not normal. We work on that probability. So it should bounce down. This is what happened here. The market got here. Let's see if we have. So let's draw in the future. So we can have this now. So we can all see this. You can all see this small reaction that happened on this place. So that's the reason we have that here. So let me just give you a little picture. Don't worry, it might sound complex, but by next week, I'm telling you, you will already feel yourself as as one of these gurus in trading. But it's not. That's not all. Now I'm emphasizing that's not all. It's risky. It's risky not to take risks. But there are some risks that when you take them, you should have sense. So let's get this. So trust me, this previously was a support, according to what I taught you. But the market came back, it reacted off this. You can see some reaction that happened. Let me now tell you the secret that a lot of people don't understand about chart. What you are seeing in chart is not actually candlesticks alone. It is actually reactions between real people like humans. I don't know what to say in Igbo. Humans trading, buyers and sellers coming into the market. Their reaction is what you're actually seeing. So now, everybody that traded this market here, that bought this market at this point, yeah. Once the market got back to this point, see what they did. They want to start buying the market again. Because as you can see, buyers start coming. Maybe probably if I'm in this market, I will start buying too. Sincerely speaking, because it's a resistance for me. And once I say resistance, it's a support for me. And once I say support, I should buy. That's what I was taught. That's what I read. So automatically that's what I'm going to do. That's what I know. So I'm going to buy. But actually, time for stop loss. I'm going to place my stop loss below that trend line. So I should have something like this.
if I will be trading this market, I should have something like this. Maybe probably enter somewhere here and have my stop loss around here and target this trend line. Maybe probably around here. Having my risk to reward ratio 2-to-1 or 3-to-1 or 4-to-1, depending on my mood that day. Maybe I want to risk a lot. I don't want to risk a lot. So depending. So thank God for stop loss. See, buyers did what? Let's study the price action within this area, sorry, within this area now. See what happened there. As the market is coming, the market did what? Created a doji. Remember? Indecision in the market. The sellers and the buyers are confused. They are consolidating. They don't know what to do. Created another what? Another inverted hammer. Do you remember what inverted hammer? Created a what? Another doji. Yeah. See what is the market was. Eventually, see what the market created. The market created a what? A bearish engulfing candle. So this is how cheap and how sweet forex is. Just have the basic understanding. You eat, you will make money every day, you will print money. It's as simple as that. So that is that concerning candlestick pattern. And please find more. See this example now here. This market is coming down here. This market is coming down here. It's coming down here. I mean, at this point now, the market is coming down here. And once this market wants to start going up, see what the market creates. A bullish engulfing candle. There are a lot more. See what the market created here. This is an uptrend. The market coming down. It's created a tweezer. You can see that. You can see that very well. So let's keep going. You can see. There are a lot more to forex. I won't lie to you. You really need to start making a lot of research yourself, start reading a lot of books yourself. I'm this kind of person. I'm not an office person, I'm not a corporate person. I used to tell people, I'm not a corporate person. I want to make money. I don't want to work for money. I want to make money. So if I want to make money, then I have to pay the sacrifice of making money. Part of the sacrifice of making money, according to the billionaire mindset I read, is reading books. Read books, watch video, get your data for chatting, for looking at status. Go to YouTube, download what I've taught you today, download similar videos like that. Watch there. There are people having a lot of better understanding about the market than I, having a lot of better explanation than I. You understand? Most simpler one. Go online, watch those videos, and I'm telling you, if you can do that, I did it for 3 years, 3 good years. The result you see, I'm pasting like, well, I made 100, I made 300, I made 500, I made 1,200. It's not just a day job. If you can see the blood dripping from my body, a lot of sleepless nights, a lot of even academic failures. Yeah, I risked a lot of. There are days I have exam. That someone hosted a free class of what I have the knowledge of, but I have to risk even my exam for that class. I went for that class actually. I went to attend the class. Just jam. Where you're supposed to have A, or you didn't study. Eventually you have C or D. You understand? But I know what I'm actually paying the price for. So please, if you are really into this thing, I really know that the reason why you pay that your 2,000 naira, I know it's very hard for some to do that, is because you really want to know better and know more. Please, just don't think of paying money. Think of investing yourself. Sincerely speaking, my first year, nobody taught me forex. My first year, nobody taught me. I read a lot of things. So when I now start having mentors, things they are now explaining, what I've now read start coming alive. That's just how it works. Read first, and if you now see someone to just explain a little bit of that thing you've read for you, everything you've read will just come alive. It's just like pouring petrol in just a single matches on a lighted single matches of matches. Lighted candlestick. I said candlestick now. Lighted matches stick now. If you just pour petrol on it, even though that candlestick doesn't have the capacity to burn a whole house, but because of the petrol that is being poured on that single matches stick, it can explode and blow your house. That is how understanding comes with preparation. If you don't prepare first and you want understanding, oh, you won't have it. But if you prepare and just a little understanding, a little explanation of understanding comes in, oh my Father, you are lighted up. So by tomorrow, by the grace of God, I pray no sickness fall on me, and I pray I have no traveling or maybe extra classes to take. I'll be saying another video on how to find support or resistance in a train line. Because if you notice, let me do last example before I close this class, so you guys can prepare your mind on what I want to take next week. The law of my trend line says we have this line here. I'm the support and resistance. We have this line here. We have this line here, right? Once price come from this point to this point, to this point, that is resistance. Here is support, resistance, support. It broke the support. The support turned to resistance, resistance, then support. It broke that support. So blah, 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 and like that. So same thing here. See what happened here. Here is a what? Here is a, for this guy, here is a resistance. But the market broke it. It became a support for this guy. And this guy created a new what? A new resistance, right? A new resistance here. And the market broke it. So I was expecting a push down. So now, if you are wise enough, I've given you like 3 confirmations. I actually have like 7 confirmations I use. That's the reason why most of the time my trades are very accurate. Very, very accurate. Because I have okay, sorry, I really need to explain what I mean by confirmations. Confirmation just simply means that a lot of people are looking at that point to trade. A lot of people are looking at that point to trade. So those people that are focusing on support and resistance. So once they see this guy break this guy, this support, this resistance they are turned to support for this guy, they will be trading this market. Those people that are trading trend line from one point to another, they will be trading this trend line. Those people that are looking at price action, maybe bullish engulfing candle, bearish engulfing candle, they will be trading this trend line. Those that are trading Fibonacci, my Fibonacci, okay, here is it. Here's my Fibonacci. The 50 level to 51.8 level, which is my golden level, which is here. This guy here, this point here. They'll be trading these ones. So these are my what? My confirmations. So I'll be teaching you guys those Fibonacci later. No. Yes, I will teach you, but I'll show the settings to those that will pay for my my upgrade class. I'll be having an upgrade class. That will be after this 3 weeks class. That upgrade class. I need just 2 people. Please. Just 2 people. That's 2 people. Oh my Father, we're making money together. Even as a beginner, you earn while you learn. That's it. So that's how it goes. I believe you guys briefly understand today's class. Please, if you don't understand anything, don't hesitate yourself to watch this video again and again and again and again. A lot of you are YouTube freak. You can spend hours on YouTube, but something that comes with earning, I don't know why you don't spend your time on them. So please, I beg you, watch this video every time. Once you are confused in the market, go back to the video and watch them. If possible, download them from YouTube. Yes, download them. Have them in your file because I'll be deleting my link. Download them. So that's that. Yeah, I believe you guys understand. Any question, you guys should forward it into my DM. I'm gonna answer you as soon as possible. You guys should have a wonderful night rest because I'm at evening here. So bye guys. Have a nice time.